Welcome, dear traders. You are watching a recap of the Asian session. Sentiment on the Wall Street is now shaped by fresh earnings reports. Asian stocks mirror trends in the US stock market. Against the backdrop of the negative dynamic of the US energy and the tech shares, Asian equities also slid into the red. Given that the main events of July will occur next week, investors are unwilling to buy risk assets today. Next Wednesday, the Fed will announce its rate decision. On a Thursday, the ECB will hold the policy meeting. And on a Friday, the Bank of Japan. If the latter hardly makes any drastic changes, the Fed and the ECB are likely to raise rates further. The only question is, how high and for how long? Yesterday, the People's Bank of China kept the interest rate unchanged. Despite sluggish economic growth, the Chinese authorities continue to pump up the banking system with the yuan. Market participants are more interested in the steps that China intends to take to revive the economy. For example, the National Development and Reform Commission announced new measures to support local businesses, and they are aimed at bolstering demand for cars and electronics. US-China relations have a great influence on sentiment in Asia, and the US is ready to impose new restrictions on the flow of the US investments and AI chips into Chinese companies. China, in turn, warned it would take relatively measures. However, the two largest economies are making efforts to somehow improve worsening relations. For this purpose, former US Secretary of State Henry Kissinger visited China. The politician, who turned 100 years old in May, held several meetings with the country's leadership, including China's President Xi Jinping. Although this visit was a symbolic one, it could have a positive effect on the US-China relations. The US dollar climbed in the Asian session amid expectations of the de-escalation of the conflict. Investors are still skeptical that the Fed will change its stance this year, especially given yesterday's labor market data. Initial jobless claims fell to a two-month low. Hence, there is a strong demand for the labor force in the United States. It signals tight labor market consolidation. As a result, the Fed may remain committed to aggressive tightening, while investors were assessing the prospects for the Fed's monetary policy, and the US dollar consolidated above 100, hovering at 100.90. Moreover, it reached a weekly high versus its rivals. It's projected to close Friday with an increase of 1%. In Asian trading, the greenback entered a narrow corridor of 100.70 and 100.90 and showed signs of growth. Partly, its rise was boosted by a fall in the pound sterling, and now the support level is located at 99.57. This is the annual low of July in the case of a breakout of 100.96. Dollar bulls will face a strong resistance level of 102.60. After a decrease in inflationary pressure in the UK, the Bank of England may not raise rates as aggressively as previously expected. It considerably affected the trajectory of some currencies. For instance, the greenback climbed significantly, which was extremely bearish for the yen. Besides, US government bond yields also reached the weekly highs, pushing the yen down. Due to the discrepancies in the monetary policies between the Fed and the Bank of Japan, the yen is particularly sensitive to changes in the treasury notes. This week, the yen has already fallen by about 1%, and it's likely to continue this trend. After moderate consolidation, the dollar-yen pair jumped to 141.70 at the end of the Asian session. The borders of the range of 139.70 and 141.90 could move even higher for the end of the day. The Australian dollar retreated as well following a rise in the US dollar. It also slipped due to risk aversion, a moderate increase in oil prices, the sluggish recovery of the Chinese economy, and the weak yuan. The risk-sensitive Aussie ignores optimistic internal data, and the employment report showed that the labour market in Australia remains strong, so it enables the Reserve Bank of Australia to raise rates more aggressively. However, the Reserve Bank of Australia meeting will take place only on August 1, therefore the Aussie reacts more strongly to external factors and continues to decline sharply in the range of 0.6744 and 0.6789. At the end of the Asian session, it touched a new weekly low of 0.6750. The AUD-USD pair is expected to drop lower. The New Zealand dollar also went into the downward range of 0.6190 and 0.6243. Besides, economic reports were quite negative. The annual inflation remains at 6% and the economy is going through a technical recession. In the Asian trading, the Kiwi broke through the support level of 0.6200 and declined lower. Its drop totaled more than 2.2% and it may close Friday with a bigger slide. And we hope that your positions are profitable at the end of the week. And that's all for now. Hit the subscribe button and keep close tabs on the market developments with us. See you soon.